Hello and welcome back to the channel. Today we'll be analyzing the earnings presentation for FY24 for Titan Company Limited. For the longest of time, I thought Titan Company was limited to watches very early on. But when I really began reading about investments and investing, I came across an interview of Mr. Utpal Seth, who is the senior partner at Rare Enterprises, the partnership firm which was led by Mr. Rakesh Jhunjhunwala for the longest time. And Mr. Jhunjhunwala really went into the share when the team of Rare Enterprises did meet the team at Tata and heard their expansion plans and came back to Mr. Jhunjhunwala. And Mr. Jhunjhunwala went ahead and bought 9 crore worth of Titan share, which was 4% of his net worth back then. And by the time he passed away last year, this stock was standing at 12,000 crore, which was around 30% of his total net worth. And very interestingly, Mr. Utpal Seth would say that the team would keep going back to Mr. Jhunjhunwala and tell him that Titan is really beginning to become a big part of the portfolio. It is becoming 65% of the portfolio. And Mr. Jhunjhunwala would be hesitant to sell, but because the team really pressurized him so much, he would go ahead and sell it and bring it down to 50%. And again, it would go back to 65%. And this thing kept on happening. And even now, he's holding the shares. He's holding close to 5.3% of Titan. So we'll quickly go into the details of what some of the things that are mentioned in the presentation and why the big bull himself was so bullish even after the share had grown so much. And if we draw parallels between how Mr. Warren Buffett was really interested in Borsheim's, one of the jewelry companies in America, um, and we draw parallels between our Mr. Warren Buffett, that is Mr. Rakesh Jhunjhunwala, and Mr. Buffett and his likeliness to Borsheim's, there are striking similarities. But some of the challenges that the Titan Group is really facing is that the lab grown diamond segment, which Titan has grown quite a lot and is running a campaign for it as well, it is actively monitoring it because the demand for lab grown diamonds within the US is rising. And that should have a significant impact on the diamond industry. And the earnings for companies like Senco Gold, Titan, and Kalyan Jewelers, and companies like these. So these companies are already operating at a price to earnings multiple of 83, and future growth is already baked into the prices. So it'll be interesting to see how they overcome these risks. But we'll quickly jump into the presentation. Now, this presentation was done up as at March 30 with the figures as at March 31, 2024. And here we see that this market capitalization is standing at 3,37,000 crore. But as it stands today, the market capitalization has been lost by 46,000 crore. So if we quickly go into the share and we look, we see that the market capitalization has come down to 2,91,000 crore. So investors have lost close to 46,000 crore in between March and the current time. They have a huge presence, and most of the presence is driven by Tanishq, the crown jewel within the brand, which brings in 90% of the overall revenue, and which contributes to 7% of the jewelry market within India. So Titan, they do 51,000 crore of revenue in trailing 12 months. If we do 90% on it, we get 45,000. And if we assume that 45,000 is not assume, but we know that it's 7%. So the total jewelry industry is standing at close to 6.55 lakh crore. Most of it is, if you see the rural and the urban breakup, most of it is within the rural, and there is a 80% unorganized sector which contributes to this 6.55 lakh crore, whereas right now that 20% is held by organized sector, and this organized sector is beginning to get cluttered because Right now, there are few players on the top. So Titan and Kalyan are on the top, but Senco Gold is dominating in the east. And similarly, we have other regional players within other regions as well. So it'll be interesting to see how it really pans out. If you look at the different business segments, skin is doing really well in terms of the fragrance, but it hardly moves the needle in terms of revenue. And we'll see in the coming presentation, coming slides. So we see that jewelry is one of the primary segments, and the growth of jewelry at a very high base is even more prominent, and it is entering into international markets, and it's entering into Dubai and the US and the like. So it'll be interesting to see how this pans out going forward. Within watches and wearables, majority of the percentage, so 83 to 84%, majority of the percentage is contributed by analog, whereas only 13% to 14% is contributed by wearables. Eye care, again, it's a small segment, and fashion accessories and Indian dress wear, even if we skip it, it'll be fine for now, because it's a very cluttered market, and the real distinction is jewelry, and that is Tanishq for Titan. Here we see some of the brands that Tata owns. So Titan owns Tanishq, and then Mia by Tanishq, Zoya, and Carrot Lane. And it's quite interesting to see that 20% of the sales within Q4 FY24, that was close to 9,000 crore, is coming from digital lines. So yeah, that's an interesting piece to watch out for, and let's see how it does move ahead. And if you see the exclusive brand outlets, we see that majority of them are dominated by Tanishq, and you'll see them lined up in all the prominent cities in India and all the prominent streets in India. We also have Carrot Lane, and Zoya and Mia are beginning to take shape. So we'll quickly move on. I think the other segments are quite small, but here we can have a look at the lifestyle brands. So what comes under luxury and premium and mid market and mass market? And so we see that most of the premiums are dominated by jewelry. And this premiumization trend, as we see, and we also saw in our assessment of IHCL's presentation, it's really the premium segment which brings in 70 to 80% of the revenue. It was the case with Taj as well, and it is the case with uh, Titan as well. Majority of the revenue is being driven by jewelry and being driven by the premium segments. So when we look at the company performance, we see that the year-on-year growth for the jewelry is close to 22%. It's quite impressive given the already high base that Titan is. Is industry leading in terms of organized jewelry. And watches and wearables contribute close to 1/10 of what the jewelry contributes, and contributes 8% of overall Titan revenues. Eye care is pretty small, 2%, and is being continuously challenged by companies like Lenskart and other businesses, 4% in totality. Eye care is also facing significant competition from specialized brands like Lenskart, and watches and wearables are facing significant competition from listed companies like Ethos. Now, Ethos mostly is catering to premium and ultra premium, but Titan also has brands which go right up from the mass and to premium to ultra premium as well. But Ethos is more premium compared to what Titan is offering. In terms of the earning before interest and tax, we see that so we see the jump, also reduction in margin for the jewelry segment, which is standing at 11%. And the other business is really the new business, 8.3%. Total at the total and aggregate level, the margins are at 10.4%. The making charges, from what I've observed between the jewelry companies, so Titan does charge a premium, and since it's Tata's brand, I think the trust factor is also coming into play. Pretty similar to what it is for LIC, and how LIC business does charge premium for the policy that it sells. For any term insurance, it literally charges double the premium of what some of the private player charges. So that is something that they do. So in terms of business performance, we'll quickly look at the jewelry performance highlights. And here we see that the company has a total income of 8998 crore, and the year-on-year growth has been pretty good in terms of 19%, and the earnings before interest and tax has a margin of 12%. This is very interesting to look at. So in terms of studded, 33%, and gold coins and other is standing at 67%. Now studded, we'll need to look into what the percentage of diamond is within that studded, because that will come under a lot of pressure in terms of lab grown diamonds and the likes. Here they also mention about opening up stores in Chicago and USA, and a new store in Dubai as well. And Titan's international footprint currently stands at 16 stores. So here, if you look at the growth for quarter, and it is as a percentage of FY, each FY, we see that it has been consistent. Within Q3, for obvious reasons, due to Diwali and the festivals and everything, we see a higher growth than usual at 31%. And here again, in 2022, we saw even higher. We saw 37%, and a year prior to that, we saw 36% growth. So Q3 is definitely the one to pump up the revenues. But because of the higher base, the growth is kind of not happening at a pace which was happening earlier because of obvious base effects. And even in terms of the margin, if we see, like earlier, we were operating at close to 14%, but here as well, within Q3 2024, there has been increase in the price of gold as well, and that does have an impact on the margins as well. So here we saw that it was at 14.7%, and here as well in Q3 it was 13%, but now it's consistently close to around 12%. So let's see in FY25 how it does pan out. So we'll cover the watches and wearables in the next section. I'll close it at the most important section, that was the jewelry section. Do comment and let me know anything that I've missed out, or any points for people who are in the jewelry and sector to really aid my analysis and to gauge some of the things which I could not cover. Thank you so much.